Hey everybody, welcome back. Now, since the last Cardano update, the ADAUSD price has broken down below the post-Alonzo accumulation zone between $2 to $2.50. In fact, the general bearish sentiment of the entire market, stemming from a variety of factors including Omicron, Evergrande's apparent default, and the continued threat of central bank tapering, has seen the ADA price dump all the way back into this exact same accumulation zone that ADA spent 6 months in earlier in the year. The $1 to $1.50 zone that ADA first entered after the merry hard fork all the way back in March. Now, quickly moving on to the ADAETH price, it seems like the story is perhaps even less rosy, as ADA has barely kept pace with Ethereum on a year-on-year basis. Despite having these two major hard forks, very important upgrades introducing multi-token support and smart contracts, that was meant to usher in the era of mass DeFi adoption on the Cardano blockchain, and thus huge buy-side pressure for the cryptocurrency. Now, this hasn't eventuated so far, and look, there's been a lot of hate on the internet for ADA as an investment. A lot of hate and a lot of memes. And look, I understand the pain, right? An argument is, hey, if little old ADA can barely keep pace with Ethereum, given that Cardano has superior peer-reviewed technology and a market cap that is essentially 1/10 of Ethereum's, then from a risk perspective, crikey, maybe one should have just parked their capital in ETH, right? Of course, hindsight is 2020, and in this video, we're gonna take the emotions out and zoom out, look at the big picture and see what's in store for Cardano. We're gonna cover, number one, why ADA tends to reward investors who appreciate ADA's unique step-like price action, right? And also keep tabs on the roadmap. Number two, why ADA, in contrast, can punish those who don't appreciate these things, and especially punishes the inexperienced emotional traders with itchy fingers, very little patience, who tend to buy into pumps and then panic sell. And finally, I'll be talking about what's really holding the ADA price action back at the moment from a fundamental perspective, right? Hey, smart contracts is out, where's that buy side pressure? Well, there's good news on the horizon and we're gonna look at it. Before we start, make sure to subscribe and turn on notifications so you don't miss any important updates. Without further ado, let's dive on in. Okie dokie, so in my last major Cardano update, we looked at the historic price action for ADA, from Byron to Shelley all the way to the current Goguin era of Cardano. And look, the general message is ADA tends to have this step-like macro price action structure that's characterized by long accumulation periods that's punctured by short, sharp pumps and dumps that tend to correspond to major updates, especially hard forks that install some new feature to the blockchain. For example, the Shelley hard fork in the middle of 2020 that decentralized the Cardano network and introduced staking. We had a 230% testnet rally, even though we were not in a bear market, followed by a 50% mainnet dump. Alright, we had the merry hard fork that introduced the ability for you and I to launch our own token on the Cardano blockchain, right? This is quite similar to how Ethereum's EIP20 all the way back in 2015 allowed anyone to launch their so-called ERC20 tokens. We got a 250% testnet rally from about 50 cents all the way up to 150, followed by a 30% mainnet correction all the way back down to $1, where ADA then established a 6-month-long accumulation zone, bopping between $1 to $1.50, earning its stablecoin meme. Alright, and then we had the Alonzo hard fork in September that introduced smart contracts, or at least usable simple smart contracts. More on that distinction later. Anyway, we had a 130% rally all the way up to $3.20, followed by a 40% correction down into a new accumulation zone. Now, a key message here is this kind of macro price action structure really rewards the patient investors, right? Those who patiently dollar cost average in during these long accumulation phases, a couple of months here, well, 6 months here, that extended to a couple of years before the Shelley hard fork, right? Who can then ride these massive rallies when they actually happen and then hopefully take some profits at the very top near the mainnet launch. Now, as Cathie Wood once said, the longer the base, the bigger the breakout. Now, I should clarify, is a 130% rally on ADA really that impressive, especially after such a long period of time? You got to keep in mind that during this accumulation phase, ADA already had a $40 billion market cap. So you got to ask, which other $40 billion market cap layer 1 protocol with no smart contracts and no real value locked on the network can rally like this in such a short amount of time? Protocols like Avalanche, Solana, Polkadot, and Phantom, they only had a fraction of ADA's $40 billion market cap before their own massive rallies in 2021. By the way, I do have some deep dive videos for these smaller layer ones like AVAX and Sol. Feel free to check them out. Okay, so we've established that in contrast to the fail fast and break things ethos of Ethereum, Cardano is really the ultimate rigorous, academic, peer review focused, slow burn kind of project that's far from being complete, and the best time to buy are really during these long accumulation phases. Now what this means is the ADA price action can be quite brutal to inexperienced and impatient traders, and that's because these kind of traders don't tend to buy in during these accumulation phases because that's boring, right? Instead, they wait till the prices begin exploding, right? So they buy in here, which means they're already one step behind the trend, behind the investors and the smart money who got in down the bottom here. And even worse, many end up FOMOing in near the top, right? Where there's going to be a reversal pattern, right? Those who got in down the bottom here are now rotating their ADA profits elsewhere because it's so close to the mainnet launch. And that's going to put these traders, these traders who FOMO'd in really late 2 steps behind. Look, if you FOMO'd into ADA around here, right between $2 to $3, right before the Alonzo mainnet launch, and you've been holding all the way since then, look, I can understand why you'd be mad right now. What I'll do is link a video above on how to stay 1 step ahead of the trend and not get caught 2 steps behind, and I urge you to check it out. Otherwise, you might forever be a part of the statistical majority who lose money trading crypto. Okay, so what's ahead? Well, I think ADA's gearing up for a big breakout in the first quarter of 2022. As IOHK is currently building out the back end of the Cardano network that's going to provide full DeFi capability. Now, just to clarify, IOHK is Input Output Hong Kong, and that's Cardano's engineering arm that's headed by Cardano founder Charles Hoskinson. The other 2 core organizations that all co-jointly run the Cardano project, that's Emergo and the Cardano Foundation. I'll make a separate video on how Cardano's structure works. Now, when I say full DeFi functionality, what I really mean is that the Alonzo hard fork, right? Now, while it did provide smart contracts, it didn't provide an important set of tools for developers to deploy dApps in a best practice kind of way. Now, there's a lot of politics surrounding this, which I won't go into in this video. Some say that Hoskinson really should have had all of these tool sets ready by the Alonzo Purple update. But look, we'll leave that for another video. Right now, if you want to develop on Cardano, you have to do some extra work, such as building your own infrastructure from scratch and perform all of these extra unit and integration tests. So as a result of this, a small number of Cardano developers have deployed apps, but the majority are kind of, well, they're waiting for the Cardano team to deploy this backend. So there's basically a whole bunch of Cardano projects that are rearing to go, right? They're revving up their engines, they're ready to go. They're simply waiting for some important protocol updates before things go ahead. And as a result, there's very little value demand for ADA at the moment, right? In fact, we can see that ADA doesn't even make it on this list of blockchains for total value locked. You see, it's important to understand that the difference between value demand and speculative demand, right? ADA pumped to $3 here during the Alonzo hard fork testnet, mainly because of speculative demand. But the great news is, once Hoskinson's team is finished building the infrastructure back end, that's going to unleash the floodgates for dApps to be deployed on the Cardano blockchain in mass. That's the theory. And then we should see genuine buy-side pressure for ADA, right? Genuine value demand as investors race in to lock up their tokens for staking, liquidity mining, farming on DeFi protocols like SundaeSwap on the Cardano blockchain. Now, this kind of story is exactly what we saw in early 2021 with Polygon, right? Polygon Matic, when they announced their big partnership with Aave and Curve Finance, which suddenly saw a massive demand for Matic tokens as investors realized they could now avoid Ethereum's silly gas fees and migrate their staking and farming onto Polygon instead. A similar story for Avalanche, Solana, and Elrond, right, when they announced their own multi-million-dollar DeFi initiative programs later in the year. So again, if you want genuine price appreciation for these layer 1 protocols, the key bit is to drive value demand, right? At the moment for ADA, all we're seeing is mainly speculative demand, but I think that's going to change soon. Okay, so what have I been doing with my ADA bag? Well, I've been buying the dips, not financial advice. I've been buying the dips and then immediately withdrawing them from the exchange into my Web3 Cardano wallets. For example, this Yoroi wallet here. So I bought some around $2 to $2.50 after the Alonzo correction. And then I've been picking up more recently as prices continue to dip down to $1.20 at the moment. And look, if ADA retests $1, which I think there might be a chance of doing so, I'm going to pick up some more. Again, not financial advice. Ultimately, I'm still very much long-term bullish on Cardano. In the immediate short term, over the next couple of months, the team is hard at work democratizing full DeFi capabilities for developers by building out key tools that's necessary for the deployment of advanced smart contracts, not just the simple ones right now. I do feel like all of this should have been ready by Alonzo Purple in September, but look, it is what it is. So here I'm in one of my Cardano Web3 wallets. Specifically, this is Yoroi, the light Cardano wallet developed by Emogo. And the cool thing is you're really staking not your ADA tokens, you're actually staking your entire wallet. Now this means a few things. Number one, you're immediately staking any and all of the ADA in your wallet, right? There's no need to click any extra buttons to delegate your stake into a staking pool, assuming you already picked a staking pool in the past. So for example, if I transfer some of my ADA over from a centralized exchange like Binance, all right, so I'm going to move about 460 ADA over to my Yoroi wallet. Okay, go to the receive tab, copy and paste the public wallet address into the withdrawal page on Binance. It recognizes the ADA network, fantastic. Transferring the full amount, and let's go. Done. Right, the tokens have hit the wallet and they're now automatically staking. It's fantastic. Number two, I can stake as much or as little ADA as I want, right? There's no minimum amount since everything in my wallet's automatically staked. Number three, my ADA never actually leaves my wallet, so it's super safe. Number four, speaking of safety, there's no penalty for my stake if the node that I'm using / staking pool that I've delegated my stake into misbehaves, right? And finally, number five, there's no lockup period. I can move or sell my ADA whenever I want. I can simply transfer the ADA out of my wallet. There are no restrictions there. So staking on ADA really is quite a experience, I gotta say. And if you're interested in staking ADA, look, I have an entire video comparing the proper way of staking ADA on a Web3 wallet using Yoroi or Daedalus. Two alternatives like staking on centralized exchanges such as Binance and even on fintechs such as eToro. I'll link that above. Finally, I just want to acknowledge those of you who don't believe in Cardano, or maybe you've lost faith in Cardano, right? You've lost faith in the project. Perhaps you think Hoskinson has nurtured a bit of a cult, or you think that the academic, the peer-reviewed development pace is a bit of a joke, or perhaps you have issues with the design of the blockchain itself. Look, there's nothing wrong with that. There's probably nothing I can say to convince you of ADA's long-term prospects. That's okay. Investing is a personal thing and we can all disagree. In fact, I would love to know your thoughts down below. And hey, I gotta thank you for watching this far. All right, let's leave it there, folks. Hit that subscribe button and notification bell, and I'll keep you all updated on what's going on with ADA. All right, everyone, have a lovely day or evening wherever you are, and I shall see you in the next one.